Hi, this is Shelley Kraft, and welcome to SNNLive. We're at the Cambridge House International Energy and Resource Investment Conference in Calgary 2013. With me is Lawrence Roulston of Resource Opportunities. He's a featured speaker at the conference and a very popular newsletter writer. Welcome to SNNLive.
Great to be here, Shelley.
It's good to have you back. Let's go right into it. What are you speaking on? What is this all about? I know it's an energy and resource conference. What's the opportunity?
Well, it's the best opportunity I've seen in the junior mining sector in 30 plus years in the business. You know, the sector has been clobbered. Anybody that knows this industry has been following the mining industry knows that the share prices across the board have been absolutely brutally clobbered. Within those beaten up companies, there are a few companies that represent outstanding value, and that's really where I'm trying to focus right now, is on looking for the companies among the wreckage here that represent good value, and most importantly, that have prospects of rebounding in the near term. You know, eventually the tide is going to turn, the market's going to rise, and a lot of this stuff is going to come back, at least partly, but in between now and then, the higher quality companies are seeing strong bases building now, and I think we're going to see doubles and triples before somebody rings a bell and says, you know, the market is at the bottom. So the real focus is to identify the better quality companies that have cash in the bank, that have good management, and that have assets that you can put a value on.
That, by the way, was my next question. The differentiation factors of what is considered to be a good quality opportunity at this time and what to avoid. So let's throw that out at you and see what do you avoid?
Well, investors generally in this market are still very much risk averse. The early stage exploration companies are having a really hard time of it right now. And so my focus has more than ever has been on the more advanced stage stuff, the things where there's production within sight. Royalty companies are very popular at this time, and we've had some good success with royalty companies. So those sort of more advanced stage things, and having money in this market is extremely important for the company, because it's hard to raise money. Now, having said that, there's money out there, but it's got to be a good project before a company can raise money. So the early stage exploration stuff is going to be out of favor for some time yet. And by the same token, because of the risk aversion generally in the market, the riskier jurisdictions are not in favor. So I'm tending to focus more on North America, Mexico, certain parts of Latin America. You know, there's a few places in Europe that are very attractive. In fact, Finland has just been named, you know, the best mining jurisdiction in the world. So places like that, but avoiding lots of Africa, Central Asia, and some of the other jurisdictions that are riskier. Canada, right at the top of the list in so many ways, as being, you know, close to home, less expensive to operate, lower risk politically. So that's really what the focus is right now, is closer to home.
So let me ask you another question. In the resource sector, in the lower, maybe I hate to use the word lower, but in the exploration companies and the startups, some of them have outstanding 43101 reports. So, you know, they're pre-production, they're pre-development. So what do you think is going to happen? Are the producers going to start to accumulate properties because they're trading either publicly or privately at such a vast discount?
Well, there's a real misperception out there right now about, you know, the companies that might be taking over. You know, Barrick and Kinross and many of the other majors have taken huge write-offs over the last year or two, and not only taken the write-offs, but they've announced deferrals on a lot of their big capital spending projects because of outrageous overruns in their capital expenditure costs on some of these big projects. So there's a perception among some people right now that the majors are out of the game in terms of being acquirers, and therefore what value is there in a junior if the majors are not going to be buying them out at the end of the day? The reality is there are hundreds, literally hundreds, of companies outside of the Western-based, established, well-recognized mining companies that are aggressively acquiring. You know, in the newsletter, late last year we had 2 companies that were acquired, one of them by a private Brazilian company and the other by a Chinese company. Total value $600 million. Both of them were cash deals. Both of them were at 100% premium to what they were trading in the market. So I don't care if Barrick ever buys another junior or builds another mine. There are hundreds of other companies out there around the world that are buying these deposits, recognizing the value there, and will continue to buy deposits. And in addition to the mining companies, there's a wealth of other money sitting on the sidelines just starting to come in. Private equity, for example, is taking a real interest. They can recognize value, and they're getting really aggressive. They're coming in and they're going to be buying these junior companies. So there's lots of money out there that will buy the juniors when they get to the stage of having a feasibility study. So that's really the focus, is looking at the companies that are working toward a feasibility study on a project that has the quality and the size to be taken over by a larger company.
Well, I like your bullishness, and I like your sense of hope. The market may or may not be at the bottom. As experienced guys on Wall Street, we don't pick tops and bottoms, but you feel seemingly that this market has a tremendous opportunity. Would you comment on that?
Well, I want to be very, very clear in differentiating between individual companies and the market. I'm very pessimistic about the overall market for the junior resource companies. I think the majority of companies in this space still have a lot of downside. But as they're going down, the better quality companies are seeing an audience. And my point here is that the market is going to go down for some time yet, but by the time, you know, the popular media kind of announces that the market is at the bottom, these better quality companies are going to be up 2, 3, 4, 5 times in value, while the other stuff is still going down.
Now, to find more information from Lawrence, where do they go? What's your website?
resourceopportunities.com.
And believe me, he's got some answers that I didn't know. So I thank you for coming on to SNNLive. Your viewpoint will be well received by our viewers. So again, thank you for coming on to SNNLive.
Okay, always a pleasure talking to you.
Now let me wrap up. I'm Shelley Kraft. This is SNNLive. This is Lawrence Roulston of Resource Opportunities, a featured speaker and newsletter writer here at the Cambridge House International Energy and Resource Investment Conference in Calgary 2013. Appreciate it. See you soon.